Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss two of my recent trades that went kind of the same way, and you will see exactly what I mean. We are entering the position, and it seems like we have substantial profit, and then we're giving up some of that profit, and we just want to figure out what is going on, what is the main mistake that we are making there. So with that, let's just go right into it. And let me show you the points of entry. I probably should have put this here. So here is our first, and the only point of entry on this particular bar. And as we go up, there is no exit. And then the, if this was a point of entry, so the exit is somewhere in this area right here. I don't necessarily recall a specific bar, but there is just emotional exhaustion, with this reaction, coming to break even or so. So there is like this emotional need to close, and I'm just giving up emotionally on this position. The second position is going to surprisingly, or rather consistently, have the same mistake. So we'll start discussing it right now. Franz, so what's your first impression of this trade?
Okay. My first impression, Roman, is I would look at it from the standpoint of three things which you teach, which is what's the bias, what's the character, and what is the timing for entering a position. And since you were long, obviously your conclusion here was that the bias is bullish. You're looking at some things which maybe you can go into a little bit of detail on to determine the timing, and then the character of the move also, which is the definition that you've given us for character is how aggressively does price move and how far does it move. So when I look at your point of entry here, as a swing trader, I'd be just licking my chops and saying, wow, what a great trade. For some reason, this didn't turn out as you expected, and I think that might have something to do with your intention when you were getting into this. So could you explain how this trade ended up evolving?
Yeah, so I think this is like right on the money here. What's the intention behind this trade, or what was the intention behind this trade? Are we long-term campaigning this trade, or are we just short-term swing trading? And obviously, I think that, I was caught up in this picture right here of this trend where the price went up from 20 to 85, times 4. So expectation here that at least it's going to double from here as a continuation. But I think what's important here is for us to recognize on the technical level, what are the stopping points, right? So the stopping points are going to be the areas where supply is extreme, and it's extreme into the strength, right? So the price has a lot of momentum on those type of days where the stopping action happens. So somewhere here, somewhere here, somewhere here. And then when in the downtrend, we could see like these bars, up bars that have some moderate volume spikes, and where the price stops. So there is some selling into the strength. And I think I underanalyzed, this position. I mean, like seriously, could have done a much better job just following the position, but probably just, was not paying too much attention. It produced such a big gain, plus 50% right away. So my mind is, happy and kind of like not going into a deep analysis. And obviously, post-trade analysis is the most important analysis that you could make because, you kind of see what you're doing in the moment, and you're seeing how unconscious you are in that moment. So this is probably these two trades are kind of like that. So again, volume spikes, those contain increase of the supply, and it's very consistent through this picture, and therefore should not be overlooked. So what do we do here when we go into such an overbought condition really quickly, plus 50%? Probably need to scale out of this position at some point, and then obviously a change of behavior as a reaction, and then probably scale out somewhere here again as it, the price fails, and then after this pop up, again scale out here, again scale out here, and just get rid of the position here. But obviously the biggest thing, as Franz said, it's the switch in intention, right? So we were thinking that this would be a long-term campaign, not anticipating a short-term swing opportunity. And swing obviously developed much, much better, and the long-term, was not there, at least at that time. So as we go through the post-analysis, let me quickly just put it in here. So bias is 50-50. Why bias is 50-50, even though it went up? Well, because the long-term bias is, we're still kind of in the trading range here. So short-term bias was correct. Timing, again, 50-50. Correct timing for the swing position, incorrect for the long-term position. Character, let's put 50-50 as well. Again, just because we're going through a good defining well the character of the short-term move, not defining well the character of the long-term move. Point of entry, 50-50 as well for the same reasons. Stop losses, yes, that was okay. Add-ons, there were no add-ons for this position, and exit, no, we could have exited somewhat earlier. So our variance comes to 50%. And I'm going to say that in the comments and rules, I think what Franz has mentioned right away, intention, what is the intention for this trade? So just don't mix this up. That's number one. And secondly, it's the scaling out of the position, taking profits on overextended move. And that's going to be very evident as well in the second trade as well. Franz, any final thoughts here on Moderna?
Well, one thought, Raman, is that, and I'm sure that some of our viewers are catching this as well, when we do a phase analysis of this trading range that Moderna's in, we might want to question whether we've had enough time going through the kind of the absorption here to to complete a full kind of reaccumulation pattern.
Yeah.
And I know we've talked about one tendency that you have, which is to really be right on these, but to get in phase B sometimes thinking it might be phase C, and we all do this. So when we see this kind of a huge rally, and then at the top there, the reversal bar already takes out the low of that significant bar, that should be telling us something. That should be saying, well, maybe this isn't phase C going into phase D yet. Maybe this is, maybe we need, and here's where the intention, we need to be really on our toes to say, okay, well, originally we were looking at this as a campaign type, but maybe it's not ready to campaign yet. So I've got to be flexible in my mind and see what's going on immediately, and make some adjustments.
Yeah, absolutely. This is a great comment here from Franz. So this bar obviously was not paying in a lot of attention and probably was just distracted with other things. And no excuses there. Really have to analyze it, on the daily basis, as you have, so many positions. So something to, all of those things that we've mentioned, intention, scaling out on the overextension, and then this last comment by Franz as to what's the timing for the phases. I think it was also very, very good. Okay, let's go to the second one, and kind of the same mistake, where the point of entry is actually very good. So we're entering on the local breakout right here, and our anticipation that, we have some kind of causality here, actually extending even up to this point. Um, so absorption has happened. We are there, in terms of the demand being present. So we're just waiting for the confirmation of the demand. It comes in on this particular day. So again, the point of entry is okay, but for what intention? For the swing intention or for the long-term intention, right? So in here, it's a little bit trickier because you have a larger causality here, and we could make an argument that phase C already has happened here. So we're anticipating a sign of strength. It happens from $14 to almost 28. So that's almost 100% return. I'm going to put here 90%. And again, the same type of mistake where we should scale out some on overextension. Secondly, the intention of the trade behind the trade should be considered more. And then in terms of the exit, I thought that this bar right here, right after the earnings, where they're giving up their positions after the earnings, whereas we're expecting a backing up action. This is actually, from the course, this is the moment where we should be getting out, or at least scaling out. And obviously, I did not. I did not do this. So, kind of the same mistake, kind of the same, attention to the detail. And I wonder if maybe this is just, summer, so I'm taking a break. My mental focus is not necessarily there, so I'm making this type of unfortunate mistakes where highly profitable position turns out into like break even or slight loss even. All right, so let's go through the variance, and it's going to be somewhat the same. So again, bias 50-50 just because of the short-term and long-term references, timing 50-50 because of the same thing, character 50-50. So it goes in our direction, but actually not as we want it to be. Point of entry, the same thing. Stop loss, yes. Add-ons, yes. Actually had an add-on right before the earnings. So the add-ons have corrected, and I kind of see that throughout this month's of work, maybe in the last 3 months or so that I've been working on the add-ons. It's actually very consistent now. So I think I'm going to graduate to that next mistake that I need to put into the feedback loop. Exit, obviously no, and then the variance is 57%. So Franz, kind of the same trade, I would say, maybe slightly different. So what are your observations here? What are some of the comments that you can have for me here?
Well, again, I think your entries are gorgeous, and this is a little bit different structure because in early 2020, going into the prior to the COVID correction, this stock had a monstrous move, and then a monstrous reaction into COVID. And the first thing I would kind of be considering in this is how much supply is left above this trading range, and it's the fact that there are some pretty big supply bars above the current trading range, is that more that this stock has to fight through, and is that going to mean a more extended trading range? Although the here it looks to me like your phase analysis is really, I mean, it's textbook. So maybe the question that I would have when I'm looking at a stock that's had a big, you know, almost a well, it's not almost, that's a hypodermic move. And what is the subsequent pattern coming out of hypodermic moves? What is the analog to many other hypodermic moves that we could study that possibly we might want to consider if we're getting into this trade?
Yeah, I think it's also a very good point here, and with Moderna as well. What happens after the hypodermic move? After the hypodermic move was resolved, usually we do go into somewhat of a prolonged consolidation, and I think this is where we are. Although, I'm still thinking that there is such a good chance that we're gonna, at some point start rallying here. So this is, a really good point as to how the trading range consolidation unfolds after the hypodermic, and therefore, what would be the intention for this trade? Would it be more long-term or would it be more short-term? And obviously, the answer to this is more the short-term move. So therefore, had to play this in a slightly different way. All right. Well, interesting two trades that have similar characteristics in terms of the how P&L unfolded in this trade. Similar mistakes. So we are looking for the commonality of the mistakes. We want to post-trade analyze those. We want to notice those and put that into our process, into our routine, so that we would in the moment be able to see those mistakes as they happen and make sure that we are either getting out earlier or putting on the correct intention for the trade and so on and so forth. So with that, that's the episode for today. Franz, thank you so much, and thank you everybody for viewing Anatomy of the Trade.
Thank you, Roman. If I could just say one last thing too. The fact that you've really opened up your whole, you're trading when your mistake that helps you call attention to one aspect of your trading that you could see you needed to work on, which is add-ons, and the fact that now look at the result. It's great. So I mean, post-trade analysis like this is just an essential part of every person that wants to be a successful trader's toolbox.
Absolutely, and you have to be willing to talk about your mistakes. As you know, I kind of desensitized, about that, just because I've been doing this for quite some time, and Franz has been doing this for quite some time with his trades as well. So I think at some point you kind of develop like, this is just a job, that you have to do. You just have to post analyze your trades, figure out where you're making the mistakes, where that loop that you like unconscious loop that you go into over and over again, and then just deliberately work on that. So, and as Franz has said, and I have mentioned as well, the add-ons are working really nicely, and it took me probably like 3 months to restructure my mind, to concentrate on that. So up to the next area of improvement, and I think that in the classrooms right now, I'm going to put a lot of attention, our students' attention and myself, on the everything that happens after the add-ons. So basically, the analysis is great, point of entry is great, add-ons are there. So what's the next step? Scaling out at the appropriate places and also exiting completely when it's appropriate as well. So some work that still needs to be done, but that's why we're doing all of this. Franz, thank you so much for such valuable feedback. And again, thank you for viewing our Anatomy of the Trade episode.
Thank you, Ramon.